Ladies and gentlemen, welcome to the Money Mondays. Our podcast is taking place right here inside of an RV motorhome at the Wild Jungle. We have over 209 animals here at the ranch in Temecula, California. We are not open to the public. However, we are taking care of these animals, spending a lot of money to feed them because they are always hungry. So you might hear some of them yelling in the background. No matter how fast we feed them, they want to eat again over and over and over, 24 hours a day. They are always hungry hippos. We don't have any hippos, but we do have zebras, horses, camels, ostriches, and all things in between that we like to rescue here with the real Tarzan. However, the real Tarzan is not sitting next to me because he's out there roaming around Africa, making a lot of content. He has over 200 million views a month, but right now he has 284 million views this week making content out there. And so he's going to finish up his journey, then fly back out here, and you will see him on a future episode quite soon, or depending on when this episode came out, he might have seen him on the last week's episode. That's the beauty of this podcast, is we do it inside of RV Motorhome to make it fluid. We make it so that we can show up to a celebrity, entertainer, business person, athlete's home, their office, their gym, etc., to make it easy for them to do an episode, so we don't have to schedule it out months and months in advance. And so by doing that, we've been able to keep our podcast in the top 3 in both entrepreneur category and the business category for over a year and a half now. And we've been staying in the top 50 to 70 of all podcasts on the planet. So I really appreciate you guys sharing, liking, commenting, subscribing. All those things help a lot. When you see clips of this, forward it to your friends or share it. When you see an episode that you like, forward it to your friends or share it. Those simple little things of you sharing on your Instagram stories or you're tweeting or Facebooking, etc., sharing the podcast does help us a lot with the rankings, because we're obviously in a war out there in the ranking system with podcasts. There is an algorithm we're constantly fighting with. And so we've been able to stay in the top 3 for the last year and a half. We want to keep it going, staying at the top of the charts, because it helps us spread the message. If you notice, I'm not sitting here reading ads to you guys. I've built this podcast on our backs, and I've done it in such a way so that you guys can listen to it in 40 minutes or less. And we have a very high listen through rate because of it, which helps us with the rankings as well. And so I just appreciate you guys. If you can, like, comment, subscribe, share, etc. You can also visit us at themoneymondays.com. TheMoneyMondays.com has a cool overview. Every Monday at 4 p.m. PST, I actually go live where I teach for 40 minutes and then I do a Q&A with the audience members, the people that are part of that MoneyMondays.com Zoom call. So if you can go check out the website, share the website, share the social media, share the clips, etc. All those things help. All right, so this is going to be a short format episode. Typically, episodes are 40 minutes. This one will be even shorter than that. I'm going to cover one topic, the stock market. So let's dive in to all things stock related. Now, just to be clear, I don't do day trading, and I don't recommend anyone do day trading unless you dive deep down the rabbit hole of studying, researching everything, and learn from experts about day trading. And even then, it is a tough market because you've got to put a lot of time, energy, and focus into it, and you are up against major organizations. And if you ever watch like the show Billions, there's something called quants. You hear about quants all the time. Those are just super wizards that are behind the screens morning, noon, and night, thinking about every little angle, every little detail of every little dollar. And so I don't recommend day trading unless, again, you're a super expert and learn everything. And even then, there's some roller coasters that come along, obviously, because the stock market can be volatile. However, and by the way, you can listen to the episode with Timothy Sykes. He's been teaching about stock trading for years. There's people out there that are good at teaching it. But Timothy's obviously been one of the legends in the game teaching about stock trading. But ultimately, what I'm going to talk about is the obvious thing that we don't think about enough about the stock market is you're buying a small little piece of a company, hopefully a company that you believe in. And so I'm not going to talk about penny stocks. I'm not talking about gambling. I'm going to talk about something that's so obvious that it doesn't seem obvious to most people. And here it is. You are listening to this right now, probably on an iPhone or an Android or a computer. If you are listening to this on an Apple device, iPhone, laptop, iPad, etc., let me ask you a very serious question. Do you think that Apple will be here in 5 years? Do you think that Apple will be here in 10 years? If you do, and you had a little bit of Apple stock, why would you ever sell it? What's the point? If you bought, let's say, something for $1,000, and then it went to $1,200, and 1400 and dipped down to 1300 and then up to 1500. And just over the course of time, it had fluctuations, but year after year, it kept growing as a business, growing as a company. The stock price would become less relevant to you. I've done my investing into the companies that I buy, which is 10 main stocks, based on the company themselves. And now when I say less about the price, I don't even think about the price because the price doesn't matter to me. The company itself matters. If I believe that Amazon will be here in 5 to 10 years and longer, and I believe they're going to go from 1 trillion to 2 trillion and 2 trillion to 3 trillion, well, the stock price will adjust along the way. Will there be different roller coasters, and can it shift even if a company is doing really well in sales, like Tesla? Tesla does super good in sales, and sometimes their stock drops because of the media or emotion or the economy. Sure, but over the course of time, Tesla's stock year after year has gone up. Tesla has broke record-breaking earnings year after year. They sell more cars than some of the most household name companies that have been around for 80 years longer than them. I want to invest in Tesla. Now, people obviously say, this is not investment advice. I'm not a registered financial advisor. Oh, that's great. I'm talking about something very obvious. The things that you like. If you're willing to spend $500 on Amazon to buy products, maybe you should consider buying some Amazon stock. If you like Tesla or you own a Tesla, well, how dare you not own a little bit of Tesla stock? If you have an iPhone that you paid $1,500 for and you didn't spend $1,500 buying Apple stock, you should reconsider what's going on in your world. Here's why. Let me hurt your brain for a second. Ready for this? There is 15 iPhones, right? Those iPhones range from $800 to $1,300 on average, and the last couple were like a little bit more. Let's call it $1,500. So let's just take the average of, let's call it $1,200 times 15. That's around $20,000. So over the 15 iPhones, if each time when the iPhone 1, 2, 3, 4, etc. came out, $800, $900, $1,000, etc. The same day that you bought that iPhone, the same day you bought Apple stock. Okay? $800 phone comes out, you buy $800 stock. $1,100 phone comes out, you buy $1,100 stock. If you would have done that, does anybody know, before I hurt your brain, how much those 15 iPhones and your 15 stock purchases of less than $20,000 would be worth right now? That's right. Over $1 million. I'm just letting it set in for a second. If you just bought $20,000 worth of iPhones, like you probably did, and you bought $20,000 of stock, like I wish you did, and you just didn't do anything else, you would have over $1 million of liquid Apple stock right now that you could sell at any time, and then it'll go right into your Wells Fargo or Bank of America Chase account like that. Let me break your brain again. And I'm not even going to tell you the number because it's so big it'll hurt your brain. Do you have Netflix? I know the answer. The answer is yes. Okay. Over the course of time, Netflix has been between, let's call it $12 and $18 a month. And it's been around for a lot of years. Imagine if you bought $12 to $18 a month of Netflix stock. One of the best performing stocks in the history of the world. I didn't say buy $1,200 to $1,800. I said $12 to $18. $12, $18. So while you're out there Netflix and chilling, spend $15 and buy some freaking Netflix stock. If you'd have done that since the beginning of the company, I don't even know the math. It would take me too long and the number would be too big because it's one of the best performing stocks of human history. And we all watched it unfold in front of us. Everyone, we're all at fault, myself included, of not buying enough Netflix stock. When we knew, without a shadow of a doubt, they'd go from 100 million users to 200 million, 200 million users to 300 million, 300 million to 400 million. It's just math and time compounding. And when stocks go up or down based on emotion or media or timing or economy, blah, 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 all that's irrelevant over the long term. The long term being Netflix will go from being worth billions of dollars to tens of billions to hundreds of billions to $1 trillion. Amazon will go from 1 trillion to 2 trillion to 3 trillion to 4. Apple will go from 1 trillion to 2 trillion to 3 trillion to 4. These are inevitable things of household name companies. So if you buy from Amazon every single week, you should be buying some Amazon stock. If you have a Tesla, you should consider some Tesla stock. This is not financial advice, blah, blah, blah. it is something for you to think about and consider for yourself. If you like a product, you like a business that much to spend your hard-earned money on it, why not buy a little piece of that business that you can afford? And by the way, if you can only afford $100 a stock, that's fine. If you can happen to afford $1,000, 10 grand, 50 grand, a million, gazillion, that's all, whatever's comfortable to you. It should just be a consideration, a wake-up call. And I think you can hear it in my voice, the frustration that you are listening to this in an Apple-related product and you don't have enough Apple stock. You might be listening to this in a Tesla right now, or you might be waiting for your Amazon delivery while you're listening to this and you don't have Amazon stock. And you fell asleep watching Netflix last night and you don't have enough Netflix stock. You just should be considering the companies that you like. So think to yourself, where do you shop? What do you buy? What do you like? You like Ford? You like Walmart? You like Google? Whatever. Think about the companies that you like and research them and see if that stock might be a fit for you. But not to day trade. To buy a piece of something that you believe in for the long term. Because if you buy Netflix stock today, why the heck would you sell it in 2 years? You think they're just going to stop or slow down? If you bought Apple stock today, why on earth would you sell Apple stock in 2 years? They just released goggles that are like $4,000 and there was a line for blocks. $4,000 when we're supposed to be in recession and they couldn't keep in these freaking $4,000 glasses, these goggles. And I've never seen anything like it from a marketing perspective that they just released a product. Let me put this to you this way while you're thinking about Apple stock as I'm yelling at you. Do you know that the Apple AirPods, just the AirPods, the little $200, $300 AirPod headphones that go in your ear? Do you know if that was its own business, it'd be bigger than pretty much every business in the history of the world? The Apple AirPod itself, the one little product that's just a little piece of plastic and headphone that goes in your ear, they do billions of dollars per quarter of these little tiny pieces of plastic. Do you realize how few companies in the planet history ever do billions of dollars? They've done billions of dollars of selling these little AirPods. And so why would I sell my Apple stock? I wouldn't. I don't. I buy more. Now, when I say I buy more, you have to research for yourself. What are the stocks that you might like? What are the companies that you might like? I am yelling about the obvious ones. Apple, Facebook, obviously owned by Meta. Meta owns Facebook, Instagram, and WhatsApp, and they're going to buy more things. They have Threads, etc. If you use all these social media platforms, research Meta. See what you think. Meta's stock is up a lot this year. It's insane how much it's up. But that's because they rule the world. They have some billions of users. They make a ton of money from ads. And so you should be considering it. I'm not saying you have to go buy Meta stock, because I'm not telling you have to buy any stock. The point of this is for you to think about it and open your eyes wait a minute. I use Meta, Facebook, Instagram, WhatsApp all the time. Maybe I should buy $100 a stock or $1,000 a stock, whatever I can afford. Wait, all of my family members have Teslas. Maybe I should buy a little bit of Tesla stock. And then consider, over the course of time, what's called dollar cost averaging. You don't have to do it on purpose. It just will happen naturally. You buy in $1,000, you can afford to buy another $400 of stock next year, and then all of a sudden you make some extra money. You can put in $2,000. Fantastic. Now $200, $500. You just keep adding every month, every quarter, every year, whatever you can afford, and whatever time frame you can be in. You just keep adding, buying more of the same stock. I only have 10 stocks in my portfolio, and it doesn't change for anyone. Here's why. I don't care about your shiny new object syndrome. It's not better than Apple. So you might have some hot new company. I believe you. And by the way, it might do fantastic. I don't care. I got Apple and Walmart and Netflix and Amazon. I have household name companies that I buy their stuff as a consumer. And I know my staff, my friends, the companies I invest into, they use their products also. That's the rocket science, right? It's just so obvious to me that when humans are buying something at scale and the product is great, the delivery is great, the pricing is effective, and people love it, I want to own a piece of that company. That's it. And so if I can go buy $1,000 of their stock, and again, when I say 1,000, it could be 10 grand, a million, it's up to you, whatever you can afford, $100, doesn't matter. If I can go buy $1,000 of their stock, I own a little piece of that company, like Apple, Google, Netflix, Meta, etc. We are consumers of these brands, yet we're not buying in and investing into our future and their future, especially when it's a foregone conclusion. Meaning, we know without a shadow of a doubt that these companies, like the Amazons, like Meta, like Netflix, they're not going anywhere. Even if something crazy happens in our society, companies like this fight through it, and they have a bunch of different divisions, humongous bankrolls, like humongous, tens of billions of dollars in cash. And so they can fight through, like we watched them fight through what happened in 2020 during the shutdown. They can fight through anything. And they're not all based on any one person. Now, Tesla, from a marketing perspective, that's the one that is based on the character, Elon Musk. And I say the character because his tweets, his actions can sway the stock quite considerably in any given day. However, no matter what happens from an Elon Musk tweet, making the stock go up or down, it's irrelevant to the fact that record-breaking earnings happen for Tesla year after year after year. They go sell 1 million cars at $56,000 average, for example. Holy smokes, they're doing more than Ford in sales. What else do you want to know, right? And so, as I'm saying these names of these companies, as I'm saying in a different fashion than you've ever heard before, I'm just being really blunt about it for a reason. I want you to just think about, wow, I'm driving this type of company car right this second. Maybe I should look at their stock. Wow, on my phone, I use this app, where I buy from this company, or I love this retailer. Maybe I should research their stock. Again, the price of today is irrelevant of how I want to be in it for the long term. If Apple stock was $200 today, I wouldn't care if it went to 220 or 180 or whatever. It doesn't matter. I want to own it when it's 300, 400, 500, 600. I want to own it forever. I like to invest into things that I'm never going to sell. And in my mind, my Amazon stock, my Netflix stock, my Facebook stock, like, why would I sell these stocks? These are companies that I believe in that are going to grow from 1 trillion to 2 trillion to 3 trillion to 4 trillion to 5 trillion. I believe in them for the long term as a business perspective. I don't care about the stock fluctuations along the way, because year after year, they are going to perform from an earnings perspective, and they're only going to get smarter, faster, more efficient. They're going to keep hiring more teams, buying more companies, and just becoming more and more efficient versions of themselves. And so when you watch some of these brands go through crazy things and still figure it out, and their stock fights through year after year. Look at what Disney went through. Disney had millions of people a day going to their live entertainment parks around the world. And then in March of 2020, the entire world shut down, and you couldn't go anywhere near any Disneyland or any Disneyland-related theme park anywhere on the planet. Think about that for a second. How the heck did this company, who's been around for like 90 years, survive when it was only supposed to be 2 weeks till they find the cure? And 2 weeks became many, many months, if not years, before people felt comfortable to go to Disneyland and all the different related parks that they own. Millions of people per day would spend money at Disney-related products all over the planet. That's hundreds of dollars per person. You can do the math. Hundreds of dollars times millions of people. Holy smokes. They're missing out on hundreds of millions of dollars every single week. And their stock went up during the shutdown, when everyone thought that Disney, which it should have, in all terms of reality, should have had to go bankrupt. Disneyland had large format theme parks all over the world with millions of visitors coming through each week, and now it's closed with no sign of when they could reopen. And their stock went up. Why? Because these companies are nimble and they're going to figure it out, and Disney came up with what's called Disney Plus. And that's where we got one of the best shows ever called The Mandalorian. And The Mandalorian became a huge hit. Disney Plus became humongous, and they brought in billions of dollars of revenue, and Disney fought through it. And now their theme parks are back open, and good luck getting tickets, because they're freaking sold out sometimes at Disneyland. And now the prices went up to like $120 and $155 and some crazy amounts of money. Like a family of 4 costs you like $500, $800 now, which is insane. And guess what? Still sold out. Still getting hundreds of thousands of people per day, millions of people per week, blah, 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 at these crazy numbers. And so the moral of the story is I like to bet on companies from the actual business perspective, and I don't really care about the current price of the stock. I'm looking at the long-term value of the business, and I prefer to buy into stocks, into businesses, into companies that I'm never going to sell the stock. And so putting in smaller amounts of money over and over and over to me is much more compelling. So let's say you've got 10 grand saved up. Again, the number could be 5 grand, it could be 500,000, it could be $56 million. The number is just the concept. Let's say you got 10 grand saved up and you're like, all right, Dan, you've been yelling at me for half an hour now. All right, I'm ready to buy some stock. Don't buy any one stock. So if you have that 10 grand saved up, that theoretical number, no matter how much I like Apple, I don't tell you, oh, just go buy 10,000 of Apple. Split it up amongst things that you like. So in this example, Walmart, Google, Meta, Tesla, Amazon, and buy 1K, 2K, 3K of those, let's call it half a dozen different stocks. Now you've got a stock portfolio, right? 10 stocks, you bought 1K, 2K of each one, maybe 3K of one that you like the most, and now you've got yourself a half dozen stocks. Then over the course of time, when you have some extra capital, throw in another $1,000, 5 grand, $500, 20 grand, 2 grand, whatever you can afford. And you keep doing that over and over and over. You will be shocked what happens to your portfolio over the long term. No one can promise you or tell you what's going to happen along the way, the roller coasters along the way. What we can talk about is year after year for decades, these companies have continued to grow in sales, in staff, in execution, in locations, etc. And so if you find things that you like, find business that you like, get a comfortable amount that you're willing to put into those stocks, and just keep adding to that over and over and over, you can build yourself a good stock portfolio. Now, along the way, you might see some shiny objects. That's on you. I look at that more like gambling. Can you do really well at that? Of course you can. Can you get crushed and do really bad? Of course you can. I don't look at it stock market that way for myself. I don't want to think about it. I want to think about my core businesses, making money in my businesses, and then invest into stocks, invest into things that I believe in over and over and over. So you've heard me say a lot of the names that I believe in. Research them for yourself. Do your own research. It's called DYOR. Do your own research about the things I'm talking about. But nothing I'm saying is rocket science. I'm just talking about household name companies for you to look up and think about, maybe I should own some Amazon stock. Maybe I should buy some Netflix. Maybe I should own Meta. Maybe these companies that I buy from are things that I should own a little piece of. And especially if you're listening about Apple. Again, Apple stock is going to go up and down. There will always be roller coasters. But over the course of time, to me, the company's going to go from 1 trillion to 2 trillion, 2 trillion to 3 trillion, etc. And so when you're thinking about the stock market for yourself, research companies that you like, research companies that you shop at, check out these things. You can use apps like Robinhood and E-Trade. You can buy stocks really fast, really simple from an app. If you ever need the capital, it can go right back into your bank account within the same day or next day, depending on what time you do the withdrawal. And so you still have access when you buy stocks if you need that cash. Again, I'd rather you buy a smaller amount that you don't need the cash, right? So let's say you have 4 grand a month in overhead and you're making 80 grand a year, right? Well, I don't want you to have $70,000 of stock, right? I don't want you to put all of your eggs in the basket that you've been saving up for years and you've got 70 grand saved up and you put it all into the stock market. I'm not asking you to do that. Put in a comfortable amount into the stock market that you can keep adding to quarter after quarter, year after year, buying more as you get more and more cushion, more and more capital coming in from your job or from your investments, and just keep adding to the portfolio of the stocks that you like. And if you do that, you stick with it, and you don't get some amount in there that makes you feel uncomfortable, that you want to sell it or have to sell it for needs, you will be pleasantly surprised over the course of time what can happen. Now, imagine if you did this for your kids. Imagine you did this for your 6-year-old and your 3-year-old, and you bought them 1 share of Apple and 1 share of Google and 1 share of Netflix and 1 share of Facebook. Or you, at the next birthday party, instead of getting presents, you ask them to, I'll buy your kid 1 share of Apple or 1 share of Google or 1 share of Tesla. It's a really compelling concept when you just think about what these stocks have done performance-wise over the last 10 or 20 years each. They're up thousands of % each. Not like a little bit, not like put in $1,000 and now it's worth $2,000 or $3,000. No, you put $1,000, it's worth like 10 or 20,000 or even more, depending on the stocks that we're talking about, the companies we're talking about. These are some of the best performing stocks of all time, but we watched it unfold. It wasn't like we didn't know Amazon was going to get super big. It wasn't like we didn't realize that Netflix was going to get bigger and bigger. Like, we just watched it happen. And so as you listen to me yell and now be a little bit quieter, do your research, check on the companies that you like, consider investing into the stock market, only comfortable amounts that fit for you into businesses that are compelling to you. As you know, the Money Mondays is really important to me. We spend a lot of money, time, and energy on this podcast. If you can, share it, like it, comment, subscribe, forward it, post on your stories, tweet about it, Facebook, whatever you can do to help us continue to get the word out there. We want people to have these blunt discussions about money. And so if you could share the Money Mondays with people out there in the world, visit us at themoneymondays.com. Research yourself, everything you can about the stock market, of things that you might like to invest into. Talk with your significant other, your parents, your family, people in your household. Maybe you guys can have some fun, pick some stocks together, throw a small amount of money in there together, and just learn about the stock market and enjoy it. And then when you feel comfortable, or you've got a bunch of money saved up, or maybe I'm talking and you're already a gazillionaire, fantastic. Just think about from the stock market perspective, not from the trading perspective, long-term investments in the companies that you like. Enjoy yourselves, research, and I'll see you guys next Monday on the Money Mondays.